Former small cap darling Newfound Gold is evidently itching to become a producer. The company this past Friday announced that they have entered into a definitive agreement to acquire Maritime Resources after a month of negotiations. The focal point of the acquisition appears to be Maritime's Hammerdown property, which is set to see production commence in early 2026, more than a year ahead of Newfound Gold's own timeline to get to production. Mix in some claimed synergies, and well, you got yourself a deal. Except the market doesn't seem to be a fan of this one, with both names trading down about 5% at the time of recording. Let's dive in. Newfound Gold continues to consolidate land holdings in Newfoundland with their latest acquisition target, Maritime Resources. The purchase has been billed as an opportunity to build a multi-asset near-term gold producer in a Tier 1 jurisdiction that also benefits from significant regional synergies across its portfolio. The arrangement is set to bring together two development stage operators that are focused on central Newfoundland, with Newfound Gold focused on their massive Queensway gold project that has been the talk of the market for the last several years, and Maritime Resources focused on their lesser-known Hammerdown gold project, the latter of which is found just 180 kilometers to the northwest, which is a key aspect of this entire arrangement. While most M&A transactions tout operational synergies at the corporate level, this transaction is a bit different. Those synergies are actually expected to come at the operating level, with available infrastructure at Hammerdown, including the Pine Cove Mill and the Nugget Pond hydrometallurgical gold plant, to be used for both Hammerdown as well as early operations at Queensway. As per Newfound Gold CEO Keith Boyle, the synergies obtained by this combination de-risks Queensway, providing access to a milling facility and near-term cash flow to support Phase 1 development, setting the stage for Queensway to commence production in 2027. In simple terms, the transaction was a means for NFG to get their own asset into production, while benefiting from near-term cash flow at the same time that could fund the development of their flagship asset, which is admittedly quite prudent for Newfound Gold. The transaction, however, is much less accretive for Maritime Resources, who was sold out well on the cusp of production, for a premium of about 7 cents to Thursday's close, which was the day prior to the transaction being announced, following a week where gold continues to hit all-time highs. To say investors were rather unhappy would be an understatement. With that being said, let's take a look at what Maritime has to offer for Newfound Gold shareholders. The primary focus of Maritime at the current moment in time is the restart of the Hammerdown gold mine, which last operated from 2000 to 2004, producing 143,000 ounces of gold at an average grade of 15.7 grams per ton. A feasibility study conducted back in 2022 outlined a development plan for the mine that would see 50,000 ounces of gold produced annually over a life of mine of about 5 years, with all-in sustaining costs of just $912 an ounce. A year later, the company acquired the nearby 1,300 ton per day Pine Cove Mill, which features both tailing storage and port infrastructure in anticipation of production. Fast forward to today, and the mine and mill are fully permitted, with feed from the Hammerdown mine expected to start being processed at Pine Cove this fall, and ramping to full production in early 2026. In the interim, mineralized stockpiles are currently being processed on site. But that's not the only processing capacity that Maritime holds. They also own the currently idle Nugget Pond gold plant, which is capable of processing 700 tons per day via a carbon-in-pulp circuit. As we previously mentioned, there's some major synergies afoot here, primarily for Newfound Gold, who identified that they will be taking a multi-staged approach to the development of Queensway within a recently released preliminary economic assessment. If you recall that PEA, which we covered here, the current development plan calls for 3 stages of development. The first stage, which is to be in place from years 1 through 4, calls for production to initially come from a small open-pit mine. High-grade material from that open pit is to be crushed and transported to an off-site toll mill in Newfoundland at a rate of 700 tons per day. The ore is to be trucked some 300 kilometers, where it will be delivered to an existing grind and carbon in pulp leach plant that is expected to be converted to a grind gravity concentration carbon in leach plant at Newfound Gold's expense, with an estimated recovery rate of 92%. Conveniently, that matches the size of the currently idled Nugget Pond gold plant, which just so happens to also be a carbon-in-pulp plant. What a coincidence. Anyways, let's get into the terms of the transaction here. Newfound Gold is set to issue 0.75 common shares for each share Maritime Resources currently outstanding, valuing Maritime at about $292 million, while the premium amounted to just 7 cents a share as of Thursday's close. The reality is that this appears to be a classic Canadian leaking of the news type event. The exchange ratio here implies a 32% premium to the 20-day volume weighted average price of Maritime shares, and is a 56% premium to the closing price of Maritime shares on July 30th, which was the day before a letter of intent was signed between the two developers. Post-transaction, Newfound Gold shareholders will own 69% of the resulting company, while Maritime shareholders will hold 31%. The transaction, of course, remains subject to shareholder approval from Maritime shareholders, alongside your standard regulatory and court approvals. A $13 million termination fee is also in place on the transaction, with the deal set to close in the fourth quarter of this year. Post-closing, the management of Newfound Gold looks like it will basically be unchanged, aside from the addition of a single member of Maritime's board to Newfound Gold's board, who we assume will be a representative from Dundee Corp, who currently holds a 40% stake in Maritime. All right, so let's wrap it up. On the surface, we'd like to complain a bit about the premium ascribed to Maritime Resources. Now, this is because of the fact that their assets are key to the Queensway project ever getting into production. They could have probably elicited a higher premium for their takeout. However, the equity had a random breakout a little over a week ago after being flat for months. So we suspect that this news quietly broke before it made headlines, thereby crushing the premium. In any case, it's a prudent move by Newfound Gold and removes risk on their part in terms of executing on the development of their flagship asset, while at the same time adding some production to their profile in the interim, along with some additional cash flow. There's not much to complain about from that perspective. All right, everybody, thanks for watching. If you want more mining content, well, check out our channel right now. We got lots of interviews going on from Beaver Creek. Also, if there's stories you want us to cover, as always, let us know in the comment section. All right, everybody, thanks for watching.